Hey, good afternoon, everyone. This is Trader Tim from EminiMind, and today we're doing a trade recap market analysis video. It's May 2nd, 2022, and the theme of today is going to be quality over quantity. So I want to go through a handful of trades from last week and a whole bunch of other good stuff here related to our Fed meeting that's coming up on Wednesday. We'll talk about the put position that we've got going on. So let's just dive right in. The first thing I want to point out is where we came down to today in our intraday price action here. If markets are just about to close here Monday afternoon, and if I actually go out to a weekly chart, we can see that this low goes all the way back. It's a unfilled gap from essentially May of last year, and that low was almost touched, or that fill that price level was just about touched over here when we came down in end of February, and that was a gap down and a rally. That was one day where I did a kind of a bigger buy, I guess, if you will, or bought in my long-term account, added to the position that I've got going in my retirement long-term account. So that was an opportunity there. And then today, well, I guess last week I'd been talking about watch for that intraday reversal where things start to look pretty bad. You're selling off. You break this low from back in end of February, and then when we do break that low, I said watch for that intraday reversal, and that's pretty much what we got here today. Monday can be a good day for those because you can have a lot of fear rolling the morning down, and so because you're coming off of a weekend, so you can sometimes get a gap down in that kind of a situation, and then sell off intraday and rally into the close. But one of the important pieces that I look at is the breadth and the advanced decline line. And, our breadth really did not get that bearish today. We were like -2 to 1 throughout, some of the later part of the morning. Things were not very bad. The advanced decline line got to like a minus 1600, somewhere in that range. But, then it started to turn around pretty quickly. The other thing I wanted to point out, these are the things I'm looking at to help determine, is this a sustained move lower, or is this going to be, a reversal? Look at the VIX. We rallied earlier in the VIX, but we did not take out these swing highs. And if you look at the swing highs, they correspond with January 24th, February 23rd, March 8th. And if we go to the S&P and we look at those same dates, here's that February 24th. And we broke it in price, but we did not break it in the VIX. So here's that February 24th. We did not break above that level. So that was another signal that, okay, maybe things aren't quite so bearish. Now, do I think long term we're going to go immediately from here straight up in all-time highs? No, volatility is likely going to stick around. We've got Fed raising rates likely here on Wednesday, almost 100% guaranteed. But as we know, nothing is 100% certain. I was having a conversation with a friend of mine over the weekend, and if the Fed were to do something like only raise rates by 0.25% and kind of shock people in a perceived good way, that would certainly be, I would think, on the table for if today we would have just completely sold off and another Dow minus 1,000 day. I would think the Fed would be considering something like that. But let's go into the put hedge, and then we'll get into today's, or actually Friday and Thursday and Friday's trades. So sometimes you just get a little bit lucky, and so you pair the skill side of trading with that little bit of luck that you need. And sometimes you get lucky, sometimes you get unlucky. You try your best to repeat the same process over and over again, take the same setups, manage them the same way, try to be as boring and consistent as possible. And shorting this halfway back is where I put on my put position in the SPY. It was a 440. And it was the May 6th expiration. I put it on at the open as we gapped up. I've been talking about it for, maybe 2 weeks prior to that point, that, okay, we bounced off the halfway back long here, and when we did, looking for a retracement to the halfway back short. If we blew through it and there was no retracement at this 50% short, then maybe looking to short at the kind of a double top up here had we just ripped higher. But seeing us gap up right to that 50% and then sell off immediately at that point, that was almost 2 weeks ago now. That was a great opportunity to put the position on, and then my intention was if we got above the 61.8 at the close or the next day, let's say we reversed intraday and we rallied, I would just close the position out above the 61.8 if we closed above the 61.8. That was not the case. I essentially paid, they were $300 per contract, $3 per contract, and then today when we got kind of down to this 50% long here, we were trading down in the 3,000 per contract. So I did take some off along the way, some of the contracts off along the way. Initially, when we had that big drop right off the bat, I took a couple off just to guarantee a solid winning trade. I got to say I was not expecting it to move so fast. I was expecting this trade to sort of catch some people by surprise following the Fed meeting announcement. So that's why I put the May 6th expiration, because it was after the Fed meeting. But, the move came before, and seeing this kind of a sell-off going into tomorrow and Wednesday's Fed meeting, the announcement will come on Wednesday afternoon. We could very well have a ripping rally here on Thursday, or even if it's just one big body day, just something to lift us here once that announcement comes out. Would not surprise me. If we go lower, then we can just turn to the halfway back for a target, and that's pretty easy to kind of, I guess, the move down to me would not be as shocking as a move up, is kind of where I was going with that. And actually I wanted to go to the NASDAQ because that's the one that has traded and held its halfway back short. So if we move lower, then essentially breaking the 61.8 on the NASDAQ on the large extension would be right about where that negative 23% target is. So a move lower, pretty easy to see a target point or a place that we could sell off to. But if we were to move higher, that would, I think, catch a few more people off guard. So that's the put position. And so in that theme of quality over quantity, you don't need to make dozens and dozens of trades, every single day or even every single week. Just being strategic and placing these positions at the halfway back points, especially like in my case, I have a long-term long position that I'm hedging against. I'm not, exiting my whole long position and then trying to buy back in at the bottom. I'm just hedging that long-term position because it's in a retirement account. And so that's a good strategy to hedge. If you've got a 401k or even if you're trading full-time, there's a good chance you probably have some longer-term funds somewhere. If all your money's in your trading account and you're only swing trading everything, then obviously, that really wouldn't apply to you. You could still do puts, put positions. They wouldn't be hedging anything. That's all. So patience, super important. Patience, discipline, those two words you hear all the time. But if you focus on quality, then you'll be much better off than just trying to kind of beat the market, so to speak, by volume and quantity. So the next thing is we get into the intraday trades here. Want to highlight, looking for what works, what's been working, and keep doing that. The market is always changing, and sometimes some strategies or things that you're doing will work better in certain situations than others. But when they're working, keep milking it, keep trading it, trading what's working. And so that's what I want to talk about with the intraday trades, because last week there were two trades, Thursday and Friday. It was basically the same trade, and it repeated itself almost at the exact same time. So we'll get into that right now. I didn't really have anything today trading-wise. I did take the the 15-minute breakout popped up just for a couple of points and then rolled over. So there really wasn't anything there. My intention coming into the week was to be very, very picky with any trades that I'm going to take because we have the Fed meeting on Wednesday. Typically Tuesday is slow and I don't do any trading Wednesday morning. That very well might not be the case tomorrow. We'll still be doing the live trading session. EminiMind.com/VIP is the link to check that out. So we'll be doing the live session, but I will be very, very picky, extra picky this week. And then hopefully by Thursday we can have a little bit, more direction as we exit this Fed meeting announcement week. But let's go to Friday's trade and Thursday's trade. I didn't have anything Tuesday, Wednesday, and 2 trades on Monday. And as it would happen, so 4 trades I had last week on the ES for the retracement. And then I ended up with actually a breakout, 15-minute breakout trade every single day last week, which was actually the first time I think that's happened where I had 5 trades. It wasn't anything exciting last week for the breakouts. They kind of petered out most of the days. One of them went for I think the max profit was like 14 points, and then it rolled over. But nonetheless, there were 5 of those, and then these 4 retracement trades, all 4 of them came out as winners, which is not super common. I mean, usually I have at least one loser in there if it's one of 4 trades. So again, focus. If I had kind of like Tuesday in the trading session, things were just kind of so-so. Wednesday, I really had a hard time finding anything good. The breadth was at 1-to-1 most of the day on Wednesday, so I wasn't seeing anything. Had I really tried to force it on those days, well then the Thursday and Friday winning trades would just be offsetting, potentially just offsetting the losing trades. So if you really focus on quality over quantity, you'll really do a lot better. So Friday's trade, let me clear this and get to Friday. I'm going to mark the top and the bottom of the 30-minute range because that's where both of these, or the bottom of the 30-minute range, is where both of these setups ended up occurring. So it was a break below the 30-minute range, and then we retraced to the 30-minute range. And that's a concept we talk a lot about in the Tuesday sessions and end up taking a lot of trades near the top and the bottom of the first 30-minute range. So this is the same chart, ES, 5-minute on the left, and then just the 512 here on the right. So we broke below this line, which was the low of the first 30-minute range. Here's the high of the first 30-minute range. So up until that point, this is like 40 minutes into the day, 45 minutes or so. We were trading within the 30-minute range. When we broke below it, I simply drew the retracement like so. I first drawn it to this low, but we didn't retrace, and then just kind of kept readjusting my low anchor point over to here until we finally did retrace. And at that point, the 50% lined up as beautifully as it could with the bottom of that 30-minute low. And so taking that as a short, because if you think about it, we broke that support level, that 30-minute range, which, yeah, we didn't touch it that many times, 1, 2, 3 times down here. And then we broke it essentially on the 4th push lower. If you kind of look at just the candles themselves, we broke that support. We retraced to that support, which is now resistance. And this 50%, not only does it line up with that 30-minute low, but the 30-minute low is this prior area where we rallied off of. That support now becomes resistance. So that was a nice short. The same trade I had the day before, which we'll go over in a second. From the entry, it was just a matter of taking 3 points is the first target that I always have out there on the first half of the position, then just trail the second half. I drew up the next retracement, trailed the 61.8, and then from there we started really going down quickly. So I just came in here and tried my best to trail each candle as we moved down. I think I ended up at I think this was the one. Ended up getting taken out like around here. Let me see, the exact price was a 19 1/4. So it was close, maybe a few ticks off of the high of the lowest candle, but good enough. And so that one with the 3 points ended up being like a 12.5 point runner on the second half of the position, and that was a really fast move. And so if we go to the day before, and we'll do the same thing. We'll mark the high for the first 30 minutes, and then we'll come over here and we'll mark the low for the first 30 minutes, and then we'll go to, it was like 45 minutes again. Or actually, that one was maybe 50 minutes, but like within 5 minutes or a couple minutes of each other. We'll get over there. So that first one was 7:22 on Friday Pacific. This one was 7:25, the entry Pacific, on Thursday. So we're going backwards. The first one was Friday's trade. The second one here is Thursday's trade. And this one was here. And so we came down, we broke below the 30-minute low. We rallied. The full halfway back actually traded. Close to it anyways, close enough. And then we started selling off. And so not only, I believe this one, not only did we break, so we broke the opposing halfway back. And so not only was this one kind of down by the 30-minute low, so by the time you round down, subtract a tick, you're at, let's see, it was a 42.03. 42.03 is what I have here as the entry. And so whether you enter on the first one in the trend, I think, is that what it was? No, it was the second one because it was that crossover. And so whether you enter on the first one or the second one or even down here on the third one, this specific setup has this halfway back, this larger halfway back of the day sort of already in play. And so the 50 doesn't line up quite as neatly with the halfway back, with the bottom of the 30-minute range, but it was close enough, and we showed that we already broke through the 30-minute low. This up here had kind of a nice double top to put that little first halfway back short in the trend, and then this is essentially the second one in the trend. Looking at it here, I wonder if I have my drawing slightly different. Maybe I gotta lower it here. No, it looks like I grabbed the anchor point. But yeah, 42.03 is what I have for the entry. 3-point first target, trailed the next halfway back, and then this one was a little bit slower to move, and I just trailed each of these swing highs on the move down here, and ended up getting taken out at 41.90.50, which was just right over here. So another one that went, 3 points on the first half and then 12 on the second half. I could have got a little bit better entry if I took the first, or a little more profit, I guess, if I took the first halfway back short. But I felt like we were a little bit high off of this 30-minute low. Like we did come back into the 30-minute range, and so I wanted to see a little bit more push down. So that's why I waited for the opposing halfway back to break, and then when that broke, jumped into that short there. So those are the kind of the two bigger winners for last week. And then, like I said, nothing on Tuesday and Wednesday. Monday, I had a tiny one and then a moderate size 5-pointer. So those are the 4 trades from last week. The put hedge, and then going forward here, I would see this. If we move above today's high, that would be a catalyst for a potential strong push up. And if we go back to the ES real quick to wrap up, what I'd be looking for on the retracements is a full halfway back. So we're just going to draw from the high down to the low and see how we trade at 43.50. So if we rally, if we move above today's high tomorrow, and then coming out of the Fed meeting announcement move higher, that would be the target, or at least the short-term magnet, 43, 43.50. If you want to check out that live trading session, it's eminimine.com/VIP. We'll be trading tomorrow morning. Probably won't be super active just because I'm coming into the week with the expectation, since it's a Fed meeting week, to be on the more picky side. So I'll be a little bit extra patient, but you can tune in and ask questions there, and feel free to drop questions in the comments below. Hope everyone has a great week. I will talk to you all soon.